Introducing Zack Davis and Josh Anderson with the SoundMoney Podcast.
A little bit baffling, right, is gold prices, right? This is a space that you and I are intimately involved in every day, every second of every day. There's never a day, I don't have my computer screen pulled up for you guys, but there's never a second of any day that we don't have the gold prices on my watch, on your watch, on a computer screen, on our phone. Every second of every day, we know where it's at. And the only time we're not checking it is when the markets are closed, right? It's that intimate for us. And we buy and sell based on that all day long, every day, right? So, and we have lots of employees that's their only job in the world is to do that. So it's a space we really understand. But what's been really unique about that is even as we've started to see inflation start to level off, normally that would mean that gold would have a decrease, right? We would see a big push down on gold and silver, right? We would see a big reduction. Typically, it would be a third of what it had gained, right, over the course of a period of time. Well, we're not seeing that. Even though those things are happening, we're seeing a greater demand for gold. We've seen a little tick off, right? A little bit from the high 3,600 down to 3,490, 3,480. So seeing a little let off, but that's just pressure letting off, right? That's just
a minor correction.
It's a minor correction. It's not what you would maybe expect if you were to see zeroing off of inflation or net negative inflation. And so part of that, right, is, we dive into that and we go, man, what is causing that? Like, why? This isn't normal behavior for the price. And so as we dig into it, right, with our suppliers and the web of tentacles that we have throughout the gold space around the world, what is amazing to me, Zach, that's probably never going to change again is the usage. Gold and silver as a consumable is just skyrocketing. So where it used to be a store of value, it's still a store of value, but now you add to it its production value as a metal that is needed in so many things that are part of this AI revolution, that instead of seeing a let off with inflation leveling and to see a pressure point release, you're seeing it hold and continue to push up day after day because of its productive value, right? If you're keeping track of the AI boom, right, like we are, what's going on in China, what's going on with semiconductors, what's going on with computer chips, what's going on with energy, all of them are taking precious metals to accomplish their conductivity. And so because of that, we've just seen some remarkable things like that history hasn't ever seen before, right? The correlations are a little different.
I mean, the utility value is high, right? It's a product that's being used. And I think too, personally, I also think that the world of gold and silver is a little bit different than it was 5-10 years ago because the consumer is wiser. Even though the economy is heating up and things are doing well, it's still really interesting to hear and talk to people about their consumption behavior. People are still not spending money. This is crazy. One of the easiest places to go and see what the economy is doing is Facebook Marketplace. I know that sounds really cheesy, but it is. If you go watch what is being sold, what is being bought, what are the prices. When the economy is doing really well and people have a lot of consumer confidence, a lot of stuff moves on Facebook Marketplace. When people don't have a lot of consumer confidence, it doesn't move and prices stay low. And so it's interesting to watch because I think a lot of people are still gun shy about what happened with inflation. And they've wised up, and I think there's still a lot of just internal consumption of gold and silver with the public, not even on the utility side, but the public consumer saying, I still don't trust the market. I still don't trust this whole cash thing. Like I've been bitten. And I think we still have a lot of people that are saying, I would love to put money into my 401k. I would love to put money into my insurance program, but I feel safer putting it in gold and silver right now because I just watched what happened in the marketplace with cash, right? And what the banking system just did and whatnot. So I think the price is still being elevated a little bit because people have gained confidence in gold and silver more so than they have confidence in cash and currency.
Well, Zach, I think you speak to the greatest revolution I think that we will look back on history and say that we ever were part of in our lifetime is this is this global transparency revolution that's happened. And I'm just going to blame it. Like, I'm just going to come out and say it, like, because of Elon Musk. Like, let's be straight, right? Like,
he pulled sheets off.
He just pulled the curtain back on so many things. When he bought Twitter, right? He said, "I'm going to tell the world we're not going to censor media. We're going to let the public share." When we pulled that back, all of a sudden, everything that we ever said was a conspiracy theory. Come to find out, maybe 90% of it wasn't a conspiracy; it was true. The same thing to your illustration of Facebook Marketplace. When all the consumers had to go in the past to a RV dealer or a car dealer or a recreational vehicle store, motorcycles and side-by-sides, four-wheelers, snowmobiles, right? When all those transactions went through those entities, prices got artificially inflated and held and preserved by manufacturers. But the advent of all peer-to-peer, what I call this, this open transaction marketplace, right? Where peer-to-peer, whether that be Facebook, Craigslist, you name it, right? It doesn't lie. It shows true value. What I want, what I need, what I'm willing to sell for and what you're willing to buy for is matched up and the whole world gets to see. Whether that's Twitter in technology, in sharing truth and information, or whether that's peer-to-peer selling, it's all the same. And what we're going to look back on and always say is that's when the world got cleaned up and manipulation slowed down. So
yeah, I mean, it's really hard to manipulate prices when it's right there in front of you, right? And you find out what the real value is. Like people always debate about, what's the value of a product? Well, the value of the product is what someone's willing to sell it for and what someone's willing to buy it for. Period. End of story. Like that is what it is worth, and it's transparent now. You can see it, and it's changing the way transactions happen.
And I would hope our listeners are using the tools of the day. We've talked about this a lot at length about, AI tools, whether that be, ChatGPT or Grok or Gemini or whatever tool you like, right? But I really believe that every single person on the podcast or around who's trying to do business today better be using one of those services. And it's absolutely worth whatever their paid versions are. Like it just is. Okay. To the point, it was interesting, Zach. We had a listener send in a couple listeners send in some really sophisticated questions about, and these were genuine concerns, right? Genuine concerns about, hey, would I be better off buying gold or silver or buying an additional whole life policy, right? Insurance policy. Zach, you used to sell those. Tell us a little bit about what, in order to answer this and then tie it back to this AI thing in the world. Tell me, what is a whole life policy versus a term policy so that we can answer these questions for people?
Yeah, I mean, the insurance world is pretty complicated, and it's complicated for a reason. So people don't really understand it. They just pay their premiums, right? But a term policy basically says you're going to pay this much premium for this much amount of coverage for this amount of time. So if it's 20-year policy or 15-year policy, after 15 years or 20 years, you pay this premium. If you die inside of that, well, you're going to get that payout. Your beneficiary is going to get that payout. If you don't die inside of that, then your policy essentially lapses and you now have no insurance coverage. A lot of those now are turning into whole life policies where they'll let you turn them into a whole life policy, but it's super expensive to pay the premium. So a traditional whole life policy would basically say you're going to pay this premium to the end of your life, right? And they say end of life, but there's usually a cap on it. It's like 100 something. And if you die anywhere inside of there, then your beneficiaries, then they get that policy value, right? And then inside of that, a lot of those programs, the way they're sold is you're going to pay this higher premium. For example, let's just take $1 million 10-year term policy. Someone in their 20s or 30s might pay $100 a month, right, for $1 million of coverage. I don't know what the real numbers are anymore, but that would be what it is. But if you had the same person wanted to buy a $10 million policy for a whole life policy, they might pay $2,500 a month. Well, part of that $2,500 goes to cover the premium, to cover your insurance, and then part of that premium you pay goes into some type of a fund where you can earn interest on that, and then you have this cash value that you can pull out for retirement, right? The tax advantages are really awesome on those types of things, but it's tricky. It's really tricky. because there's this perception that you're going to have this huge cash value that you can pull from, and you still have this insurance, but the price you pay typically isn't worth the value that you get based off of the premium, the coverage, and then policy. And I mean, I think the number today is like almost 89% of policies never pay out.
Yeah.
In other words, the person doesn't die, so you pay for this your whole life, and then nobody gets to use it because you didn't die in time, right? It's like, yeah,
when I first saw a whole life policy for the first time, I think I was like 2002. 2002. And I can remember reading the fine print. And I thought it was crazy because the fine print clearly spelled out that I would pay 10% a year in a management fee to manage the funds, 15% for year one, 10% for every year after that I would pay in these management fees of the money that I put in. And I remember turning to the guy and saying, hang on a sec. So for every $100 that I put in, you're going to take $10 for a management fee. He said, yes. I said, but when it makes money, I still got to pay the 10%. He said, yes. I said, so I'm constantly paying this 10%. I'll never forget that. So I didn't know if it was still that way. So, hey, I used AI today, right?
Yeah, somebody's going to get paid to administer your policy. Right?
And it's good money, right? So I went and asked Grok today the same thing. I'm like, hey, it's been 20 years. Maybe I'm off, right, on that.
And it's changed.
No, it hasn't changed, Zach. This is crazy. The average, the lowest fee on whole life policies today is 10%, average 15% in the early years. It scales down to 10% at the back end. But that's a lot, right? Like, I just want to draw the comparison. That's a lot of money. And to make most people to win in the world, they would have to put away, $500,000, $2,000 a month to really get a policy that they're looking like that they want. I hear these things all the time, Zach. They're kind of crazy numbers, right? I just heard it a few months ago from a couple. They're like, if we could just put away, what's the number, Zach? They always say, if we could just put away $1 million.
$1 million for retirement.
$1 million for retirement. You know what? I'm just going to be straight with any listener. $1 million ain't going to get it done in 40 more years. If you're my age, in 25 more years, $1 million ain't going to get it done. If you're in your 20s, it ain't going to get it done at all. Why? Because of inflation.
Josh, try to retire with $1 million today.
Yeah.
It doesn't do it today.
No. So fast forward with continued inflation, it ain't going to happen. So to put that away, I just, I get really frustrated with the world when we build financial vehicles that are really designed to tell people that they're going to win, knowing that they're not going to win. And that's just how I feel about a lot of financial vehicles in the world. And, this person's question about, hey, would I be better off with a whole life policy or buying gold or silver? Now, by the way, I'm not a financial advisor, so I can't tell you what to do, but I'm just going to tell you what I do. Like, at the end of the day, I'm going to tell you, go ask the AI tools of the world, right? These aren't complicated things to go ask AI tools that can do sophisticated math and algorithms for you to tell. And I went through that process today, and it was amazing. I asked Grok, hey, compare for me what a whole life insurance policy would have been better or worse than buying gold over the last 20 years, right? Because the next 20 years are going to be a pretty good indicator of the last 20 years, right? That's just the way life is. My goodness. It came back and told me that over the period of the last 20 years, from August 26, 2025 to today, gold has significantly outperformed the whole life policy in terms of price appreciation and growth and anti-inflationary efforts. Spot price went from $437 to $3,384. Compounded growth by buying it every month, which you have to do with the whole life policy, right? You got to pay every single month. If you've done that with gold and silver, it's 7 times greater than what you would have accumulated with the fees and structures. I thought this was interesting. Grok went out and recognized that. That's where it told me that the average fees today are 15% annual fees for a whole life policy versus a one-time purchase price, and then up to an annual price of 1 to 1.5% vault fees to own gold and silver. And so, I love it when listeners ask really valid, good questions, right? But man, when I say thank you, Elon Musk, for helping the world be more transparent, what would take massive amounts of effort 25 years ago to get this data now it did take Zach, about 4 minutes to calculate this, right? It wasn't like 30 seconds. It was minutes and minutes and minutes and minutes.